What's going on, guys? This Tom was stocked up. We had a very volatile day today. You can see the S&P 500 was halted almost all night because it fell too low, and then you can see that it went ahead and fell lower at open, and then went ahead and went back up during the day. And right now, it is gapping up. It is going ahead and breaking our 100 SMA, which is very good. It rode right along it. Now it broke it. I think that's going to give us a lot of momentum going forward from here. I believe the market still can fall overall about 10 to 20%. But just keep in mind the volatility will be very, very prevalent still, and we will still see big gap ups and big gap downs, just like we've seen over here, and we will see it in the future as well. You can see that pretty much every single day the S&P 500 is moving so much that it gets halted. It was halted here and here and here and here. So 4 different times in the last 8 trading days I've heard. But as you can see here, it's been halted nonstop, and that's something that it just has never happened before. I don't believe. If it has happened before, it was back in 2008. But these halts are in place for a reason. Maybe it could have been a lot more volatile than this. Good thing they're there. But right now, it looks like the market is having a lot of momentum upwards for tomorrow. Wow, we're already up about 4% from the lows of today. Looks like a very good jet forward so far. We definitely broke the 100 SMA, and we did it in a very good fashion. You can see it definitely rode right along and broke through. We've been watching it very closely in all my videos. I've been talking about the 100 SMA. Right now it's above. You can see it did go above right here as well, and it had some volatility and then fell way below. And it can do that sometimes, so be careful for it to fall back below tomorrow with some volatility maybe. And like I said, there's crazy volatility right now, so just because it's going up right now does not mean it will go down tomorrow. Everything is subject to change right now. Look at how crazy this moved in pre-market and pretty much after hours. And this is the S&P 500 futures, so keep in mind it's not really after hours, but it's after hours for regular stocks. And you can just see how much it really moves, and that's huge because normally it doesn't move like that in after hours. Now, the real question we need to ask ourselves is, where will the bottom be on the S&P 500 or the market overall? Well, I think that it can still fall another 10 to 20%, and if it does, it can fall way down towards the 2,000 levels, and we can see the last time it was around 2,000 or 1,800, around those levels. The S&P 500, then it also dipped in the past, and this was around at the end of 2015 towards the beginning of 2016, and that's a very good sign. If we hit those levels, that we could go back up. Now you can see we are bullish right now as of tomorrow based off of the 15-minute time frame. But that may not hold, as we see the red candle right here. It could definitely fall back below, and it could just go up overnight, and then as soon as the market opens tomorrow, the volatility could just carry it down. It's very, very possible. Like I said, there's a big possibility that this could continue downwards. Everyone's talking about that the coronavirus could last until May, maybe. And that will be insane if we go until May with all of this chaos. Yeah, I think it'll definitely go down. The government's sending out checks to Americans, supposedly. Governments with less, people with less income may get like $1,000 or $2,000 from the government. There's no set dollar amount yet, but they're trying to give some type of stimulus package to people and to small businesses because they cannot afford this. But the thing is that bigger companies may be able to afford this downturn, or someone with more money may be able to. So they are going to go ahead and send checks to Americans, and they're going to do it pretty quickly. They said probably within 2 weeks, and they're really looking to get this done very quickly, and that's their main goal because they really want Americans to get those checks to get the market that boost that it needs. And one thing to keep in mind is that this did not come out of nowhere. They really needed something to really make the market go down, because if we go back in history, you can see how the market just steadily goes up, and then a big crash comes. And then it goes back up, and then a big crash, and then it goes back up and creates new highs. And then now another little crash is coming. And what we're looking for is we're looking to get in at the lows. And that's what this whole video is about, is trying to catch the lows down here. And you have to be very technical with this because it has a very high chance of falling another 10 to 20%. And if you really want to catch lows for long-term investing, which is very, very important right now, a lot of people should be looking to invest long-term right now because the stock market has fallen so significantly that you could catch stocks at a very, very high discounted price. And that's very important right now because that's what's going to be driving the markets back up whenever this coronavirus stuff blows over. One thing more important than the S&P 500 right now is crude oil, and we can see the crude oil has taken huge dips down and huge dips up, and right now crude oil is up 11%, so $2 a barrel, because it dropped all the way down to $20 a barrel. If you guys want to talk about volatility, crude oil has had more volatility than the S&P 500 or any of the markets put together. You can just go back and look at this big volatility downwards. That's a very large spike from 46 all the way down to $20 a barrel within 2 weeks, pretty much. Yeah, 2 weeks from this Sunday, and you can look at the implied volatility started going crazy. The volatility has just been nuts lately, and I think that crude oil has been even a bigger factor than the coronavirus on our markets. I think that the coronavirus could even be a cover-up potentially for the crude oil dropping our markets, because right now we have Russia, we have China, and we have OPEC, and all of them are banding together and really trying to cut the price of oil so that it hurts the U.S. economy, and it will. Their economies are already hurting and they don't care. Russia's is decent, but China's economy is the worst it's ever been, and they, to be honest, they probably don't even care. So all that they're going to do right now is try to hurt our economy, and right now they are by helping OPEC and helping Russia reduce the price of oil. Like I said, I believe we're nearing the bottoms. I've been hearing all day that if oil drops below 20, U.S. oil companies will definitely be hit very, very hard financially. They may not even be able to turn profit, they said. Companies that are up in Alaska will not even be able to sell oil anymore. So pretty much the oil companies will just stop while oil's that low. So that's really going to hurt the U.S. economy very, very bad. That could be a very bad recession if oil continues down. That's going to hurt the U.S. economy worse than the coronavirus will. People, I think, are really not looking at oil enough. They're really all focused on the coronavirus, but I've been hearing a lot about oil. Oil needs to be talked about a lot more, and that's seriously when we're going to find our next uptrend in the market, is whenever oil finds its next uptrend. We're nearing these levels of recession, guys. This is very, very serious right now. A lot of people do not know how serious it is, but oil is what's really causing it. And if it drops below 20, we could definitely see a recession in the S&P 500 or the Dow like we've never seen before. You can see if we go long term, you can see how much the S&P 500's fallen, how much oil's fallen. Let me check the S&P 500. You can see how much it's fallen. If we go back long term, the high from 2008 was pretty much like 1600 levels, and we broke those and we hit 3400. We could head all the way back down to those tops of 1600, guys. Just keep that in mind. It's something that's not very, very unlikely to happen. It's something that, if you know technical charts, it's something that the charts definitely set up for, and it's definitely set up to happen. It's fallen below the 1000 SMA. It could definitely continue a lot further down. Like I said, I believe 20 to 30%, but it could go even more than that, down to 1600 levels, which would be very, very insane. But if it does, just keep in mind it will be hitting a top from those 2008 levels, and it will set up very, very nicely for the market to have a very solid uptrend from there, and that's what we want. But just keep in mind that the volatility will be very, very high until we do hit a bottom and we start having a nice steady uptrend. And to cap off the video, guys, for any of you guys who stuck around, I'll go ahead and show you how to put the SMAs on. So what you'll do is you'll go ahead and head up to studies here. You'll go to add studies. You'll go to all studies. Then you'll go down to the S's, and you will find the first S's here, and you will go to SI. Oh, sorry, it's actually, there's too many S's here. It's actually the RS, and then you'll go ahead and find simple moving average right there. You'll click it, you'll add it to your chart. Now I added it right there to a very short term. You can just right click this, click edit, and then all you have to do from there is just change it to whichever one you want. Now keep in mind I have a few on my charts. I have a, let's go ahead and check mine. Let's edit my studies. So I have a 100, a 300, a 500, a 200, and a 1000, and a 750. But keep in mind that I also keep a 500 exponential moving average on there, and this 9 is just the one I just added, and this is where you can see all of your guys' studies and different indicators that you have on your charts. You can just go up to studies and click edit studies and see all of that right there. And these SMAs are going to be very, very helpful for you guys. You can see big changes in the market, big fluctuations. You can see big times when the markets bounce off of these SMAs, like right here whenever we had this bad December. We went ahead and bounced right off the 1000 and then went way up. Now we've actually dropped below the 1000, which is very unfortunate, which could mean we could continue lower, or we could continue to bounce up from here. But I do think we could continue a little bit lower.